Sure, everybody likes big, solid dividends.
I have a plan.
It's the main reason why many investors pursue real estate investment trusts.
You've got a plan.
But a sizable payout and solid cash flow aren't enough to make a REIT a sure thing.
I have part of a plan.
And it can be hard to make astute choices while adding real estate to your portfolio.
I have an idea.
Brad Thomas, editor of the Forbes Real Estate Investor, looks at all real estate investment trusts to separate the smart picks from the fool's gold.
What one man can do, another can do. Say it again. What one man can do, another can do. Say it again.
Each week here on Money Life, Brad brings you one choice to consider for your portfolio, looking at its pros and cons.
Whoa, now slow down.
So that you can make well-informed choices in managing real estate within your investment portfolio.
What one man can do, another can do.
So put your thinking cap on. It's the Intelligent REIT of the Week.
Yeah.
Right now.
That's right. It's the Intelligent REIT of the Week with Brad Thomas, editor of the Forbes Real Estate Investor. And yeah, what one man can do, another can do. You can learn some of the things that Brad does at the Forbes Real Estate Investor, can come up with good, solid information on REITs because, well, it's really easy to just kind of look at a REIT and go, oh, let's do this all for the yield. There's a lot more than just yield that goes into the REIT story. Now, last week we debuted this feature, and it was Realty Income, ticker symbol O, that was the REIT of the week. We'll find out Brad's choice for this week in just a minute, but first a reminder. You can go to Forbes.com/newsletters/Forbes Real Estate Investor if you want to go there, or you can just go to iREITinvestor.com, as in I for intelligent REIT, iREITinvestor.com. Brad is on Twitter. He's at Swan_investor. But right now he's here. Brad Thomas, welcome back to Money Life.
It's great to be back on the show, Chuck.
Our Intelligent REIT of the Week is
Lexington Realty.
Lexington Realty. It's ticker symbol LXP. And Lexington Realty, what's the story here? Why is this an intelligent REIT to be looking at now?
Sure, Chuck. Well, of course, last week we talked about Realty Income, which is also in the same peer group or the same subsector in that they are both triple net REITs, meaning they have long-term contractual leases. So this is the other extreme to that peer group, and Lexington Realty is trading at a pretty substantial discount today, Chuck.
You know, most people hear discount. Discount for them is pure value investing. Is this simply a value investing metric, or is it one of these things where you're looking at it and saying, look at all the property here and look at the fact that, you know, you can buy it for how significant? 90 cents on the dollar, 70 cents on the dollar? What are we talking?
Well, as you know, I'm not a market timer, so I'm talking value investing. But when you look at this particular company and you look at the stock price and the action that we've seen over the last 90 days, this stock's down about 18% and down around 30% over the last 2 years. So when you look at the price action for this chart, you can just see, well, it's really trading at a low price. But when we look at the value metrics, we look at the dividend yield, which is now 7.5%, one of the highest, the second highest in the peer group. We look at the earnings multiple, which we call price to funds from operation multiple, which is below 9 times. It's around 8.8 times, the lowest valuation in the peer group. So you can see that this company is really on sale today. So, I've spent a couple hours today looking at this company in great detail. Their earnings just were released last week, trying to see if there's anything that I missed or is anything that Mr. Market has missed. And I'm coming up with a pretty interesting, conclusion about this stock.
And that conclusion is what? Is that conclusion that here's the upside? When you look at something as a value investor, do you wind up starting from a side that says, let's get this back just from the discount to fair value? Or do you think there's a reason why, hey, when the market wakes up to this, you could wind up seeing it selling at a premium?
Absolutely. I mean, Chuck, I'll tell you, I don't have the crystal ball. Again, I'm not a market timer, so I can't tell you if we're at the bottom or not. But when I look at the fundamentals of this company, when I look at the earnings they have been able to rack up, when I look at the dividend growth, which is pretty incredible, I was looking at that today, and just the average dividend yield over the last 4 to 5 years. Now, they did have a big dividend cut during the Great Recession. I did want to acknowledge that, as most REITs did. There were only a few that actually did not cut or actually increased. But when you look at this company post-recession and you look at the recovery and really what I call the evolution of this business model and how they've been able to reduce debt significantly and reduce a lot of secured debt. And again, all the fundamentals are looking better and better. Their occupancy rates, They've extended their leases out where they used to have a weighted average lease term of, say, 7 years. Now it's over 12 years. So when you look at all these factors and you combine them, you can see a much safer security today, but the market doesn't see that. So that's why I really believe this company is really trading at a really attractive price today.
Do you see a catalyst that would wake the market up to this? You know, the truth is that the market can remain irrational longer than we can remain solvent. That's the old saying. So on the one hand, we're investing on this at a discount, and on the other hand, you know, that doesn't mean the market's going to wake up and smell the coffee anytime soon.
Well, first quarter was not impressive, but frankly, I wrote about this company the last quarter, and I warned everybody. You know, first quarter was not going to be jump out of the seat type of earnings. But I think what you're going to see, the catalyst that you referenced, what you're going to see is the company is going to continue to grow its earnings, or FFO, over time. And as the evolution continues, and they do have some of the older multi-tenant properties, that's probably been the biggest weight on the share price, has been some of the multi-tenant properties they own. Again, this is mostly a single-tenant REIT. But they've been able to dispose of quite a number of these multi-tenant assets, which are more risky because they have CapEx and leases are shorter term. So as they continue that process, I definitely see the catalyst in place to move this share price, even get closer to the peer average, maybe even closer to a 12 multiple. So I see if you get in the stock today at the right time, again, I really feel like there's a great opportunity. And you know what? You get paid 7.5% while you wait.
Exactly.
So
7.5% while you wait is definitely not a bad thing. And again, with Lexington Realty Trust trading at about $9 a share and being significantly undervalued, well, it sounds like it might be, well, it is, from your standpoint, the intelligent REIT of the week. It's ticker symbol LXP, Lexington Realty Trust. Brad Thomas's Intelligent REIT of the Week. Brad Thomas, thanks so much for joining us.
you bet, Chuck. We'll see you next week.
Absolutely. Brad Thomas is the editor of the Forbes Real Estate Investor. For more information, go to iREITinvestor.com or go to Forbes.com/newsletters/Forbes Real Estate Investor. Remember, you can follow Brad on Twitter. He's at Swan_investor.